Good morning, everyone. Welcome to the Eurotrade. I'm your host, Market Stalker D. If we're meeting for the first time, I've been trading for almost 20 years, and I'm a commodities trader. So you will see me trade a lot of precious metals, energies markets, and similar, and some base metals. So we have a copper trade, or I have a copper trade. Who's we? Now, I was looking at Asia session. I stayed up for quite a while. It was pretty muted, but to me, this fight around 580 meant that we are in a very good position to run a swing lower. Now, this is also because of the developments on the weekly and daily. So we went into an all-time high some time ago, and then we just weren't able to get back up there. Now, copper likes to establish some ranges sometimes, but it also likes to do these big jumps off a cliff, where it just runs for like 600, 700, 800 ticks in a day. If we lose 570, we could be looking at an even bigger drop. We are a negative gamma. That increases volatility. It expands ranges. So we look to the next reasonably strong level that could put a stop to it. And I have nothing in between 570 and 550. And 550 area would be where we came from the previous reaccumulation and then a breakout. So it would make sense. But the ADR low is sitting at 567.15. So at the very least, we should test that. Anything past that is a matter of the amplified movement in the gamma condition. I do also have a natural gas long that I initiated when it touched VWAP. They did bounce from... Now, look, natural gas is in rollover today, so this might not work. They're also expecting the inventories and stuff, but they still ran it higher overnight, and now they seem to have settled into a nice little range for this beginning of the London session above VWAP. I want to see where they build value. And both of these are micros, so I want to see if I can give some love to this 50K Express account. So we'll see whether they can actually initiate. There is a call wall at 525 on this old contract. It should be rolling today. But I don't know whether Topstep is going to roll it on time, so we'll find out. We may have to call on Coach Hoop to give a couple of pokes to someone. Alright, so trading nickels. Good to see you here, man. I haven't seen you in a while. Any idea why I might trade better live than on sim? I decided to fund my own small account, and I'm doing much better than with combines. By the way, I didn't sleep much, so I'm running on like 3.5 hours sleep, so be aware of that. And trading nickel says taking payouts all the time from your live account. So I have a couple of issues when it comes to combines and people trading combines. They don't see them as something that they should cherish. They see them as, I can always reset, right? But when you're in your live account, it's your real money. It's a lot of capital typically, and for certain people, not everybody, because some people can be muppets with their own cash as well, but for some people, you kind of start thinking, you know what, I need to cherish this amount because it's a lot of money. It is my cash. I can't be a muppet here. I just can't. And some people have a natural block to not gamble with their own cash that takes them, a while to gather. And of course, you have some other people that generally don't don't care either way, right? But trading nickels, it seems like you are one of the first kind where you're being very patient with your money. Maybe you use bigger stops. Like how is your approach with the sizing? Is it much smaller size? Is it, are you taking swing trades? Are you taking much smaller positions with bigger stops? You need to explore that and then try to see why. Is it that you're doing better in your life? Much better. So, I would imagine that it's probably a combination of all of that. Yeah, you see? Not swing, but yes, I do trade with wider stops. So you know how I don't nitpick on stops on these accounts, on prop accounts? There's a reason for that. Because ages ago I discovered that tight stops just don't work. You can't change your strategy to accommodate tiny stops. That's just not a thing. So you have to be aware that giving a trade room to breathe can be the difference between boom or bust, right? So for me, if I'm trying to catch a bigger swing, I don't mess around with trailing stops. I don't mess around with 10, 20, 40 tick stops, right? I want to capture a bigger piece of the pie, and that's not going to happen on a tight stop. So I usually try to go for 2R. This is why I like to divide the average session range of whatever I'm trading by about 4, 5, or 6. Now, if I'm swing trading intraday, if I'm swing trading outright, which I don't do much, if I'm going to swing trade, I will use options. But if I am going to swing trade, I will actually use probably about half of the entire ADR for my stop loss. Maybe even an entire ADR, depends on how long I'm planning to keep it. But, tight stops, in my opinion, just don't work confidently enough, especially on very very liquid products that have a lot of movement. So you get a lot of noise. And if you're placing stops, there's a big difference between placing a stop, let's say, let's give you an example. Let's say you want to run a continuation short, right? So placing a stop to save some money, that's false economy. And then placing a stop like this, just above the previous high. To me, that's a terrible stop loss placement, right? So when I'm in a trade, I actually want my stop to be quite a ways away from it, from the nearest perceivable top of the swing. And then to try and maybe see if we can get all of this rather than tiny chunks in between. But that's me, right? So, however, that is how I teach people to do things. I stay away from round numbers as well. So if there's a round number somewhere here, let's say that this was 75 or something, I would then aim to enter somewhere closer to 75 after the wick of this stop, and then to go the other way. Now let's say you're looking at longs. So what would be a really terrible stop loss placement here? It would be the one where you're really close to the previous low. Why? Because previous lows get taken intraday, especially if they're in a downtrend like we are today. So what would be a good stop that might survive a potential liquidity grab, stop run and reverse? It would be something along the lines of this. So where's the round number? It's 69. Where's our stop? Well below that. That makes it a safer attempt. And the way I trade, I would look for the takeout of the lows and then a reversal, because that would be the setup that we look for at this summer day. So quality of your stop placements is something that is not talked about enough, I feel. And I'm guessing wider stops is why you're doing better. So why not use wider stops in small size in your combines as well? people have this rush whenever we're talking combines. They are constantly itching to. They're constantly itching to pass in 2 days, get the big move, get more cash, more size, more this, more that. That kind of an approach just doesn't work long term. We heard Aaron from the risk team yesterday. We had a chance to cross paths in the green room, and he was talking about people who in 10 days make a ton of cash, but the problem is that usually doing that and full porting 15 contracts at NQ and then getting a few days out, they do that for maybe a week or two, and then they get into this daily loss limit bonanza mode. Where, like, we had this one guy that made 100 grand in 1 day, and then he had 42 days of daily loss limits, and then lost about 90% of it over the next month, basically, well, 2 months. So be kind of wary of social media, of people who are like, oh, made crazy amounts of money. Great, good for you, mate. But comparison is a thief of joy, and I feel that the online prop trading industry has gotten worse since like 2-3 years ago. Because before it was a new thing, nobody knew what it was all about. Those of us who are the OGs of the online prop firms, because I've been with Topstep in some shape or form for 10 years, we never had that assault on our senses where Twitter, YouTube, everybody's pushing huge amounts in your face. But just remember, everything you see on TV is not quite as it seems, and a lot of people who are pushing big payouts, they're like, wow, I just did like 600,000 payout. They don't tell you the story behind how much money they've spent on blown up combines, on everything to get to that point. So it could be, because you're thinking, well, they probably just spent a little bit of money, right? Maybe they bought like 10 or something, and now they have 600K. The reality is that it's going to be hundreds of blown accounts, and some of those people are already well-capitalized individuals from various sources, not just from trading, which is absolutely fine. I have nothing against people who are trying to get the money and, working on multiple sources of income. I'm all for that. I'm not saying anything about that. It's just the whole, oh look, I took a massive payout, and then people think, well, I'm gonna buy 10 combines, whatever, and they go, oh, I've just blown up 10 combines. So now that's a lot of upfront cost for most people, right? But if we were all a little bit more careful with cherishing the accounts, that goes for me as well. I've also fallen into this, oh, whatever, why should I spend time in a combine? Now, if I'm running into a drawdown period or something, I do find value in staying in combines. But if I'm doing well, I absolutely do not want to spend time anymore in combines longer than necessary. And I will try and pass them in a couple of days. Does it always work? Of course not. There's a lot of blown up accounts. Like yesterday, that tape bomb, like I had the good... my good MHG trade that I was doing whilst I was in group coaching, that worked swimmingly on the XFA. But then what did I do? I decided to short silver on 3 50K combines. Sorry, to long silver on 3 50K combines. As the tape bomb came in, that was gone, and I lost all 3 accounts, right? But they were just combines, so it's fine. I can always reset. And this is the mindset that leads us, and I'm very aware of that. It's a mindset that leads us into this, oh yeah, whatever, I'll just reset. Who cares, right? And when you don't have that on your personal account, then you're like, hold up. I can't reset this because that's going to reset on a personal account is going to cost you 10, 20, 30, 40, 50K. Not even, even back to funded is cheap by comparison, right? So yeah, I think that's what's happening there. I think you're being more mindful, smaller sizes, wider stops, and respect towards the money that is truly yours. Whereas you didn't see the money go in from let's say, I've been live with Topstep a couple of times. You don't see the money going from XFA through the banking system into a new live account. You just know that there's some balances that are being transferred, and that makes it sometimes not real for some people, right? It's like, well, it's not real money because it's just like numbers on the screen. But if you are the one who, saved up the cash, then you funded your account, and you went through the whole let me wire the money, and you saw that money leaving your bank balance, it makes it more real. And for some people that is enough of a sobering moment to go, hold up, what the hell am I doing over there with the combines and stuff? Because it's funny money. Oh, I'm not going to be as respectful. And I feel that is the majority of the issues of the current prop world online. So yeah. Cody says, tilt is a wild thing. Still lose less with props than I have in my personal. Not ready for personal. That's absolutely fine. Yeah. Many people find that they're not ready for the personal account. I, nearly 20 years ago, I didn't have another option, so I had to start with personal. And yeah. Shadowburn says, hello D, hope you're doing well. What would you consider a good risk in dollar amount of 50K express to begin with? To begin with, so my answer will depend on whether you are an experienced trader with multiple payouts across, a long period of time, not just like one and then nothing for like 2 years. But, consistent payouts and whether you have enough confidence in your system. So for somebody who's just starting a new XFA and you don't have consistency and maybe you're still finding yourself, I would probably start, and what are you trading? If you're trading something like silver, I wouldn't do that on a 50K. Again, 3 combines yesterday. Why? One tape bomb that went against me, and that was it. And even though it's sim, there is simulated slippage, because they do try and match the orders on the back end, even in the sim. But it never hits the exchange. So it should be, in theory, easier, right? Your stops should be respected, but they're not. And I would probably stick to products that have true micros, so M&Q, MES, MYM, very easy to manage risk and size up or down accordingly. M&G, Crude Oil and me are not talking right now, but Crude Oil used to be a great product. It has a true micro. Don't think it's worth it at the moment for intraday. Well, not at the moment, for 2 years now, because something happened to Crude Oil. It's not the same product. But you can have, gold futures. They have a true micro, even though right now, if we're talking last day or so, the volatility has just gone completely crazy again. So it is not the best. All right, so it looks like copper wants to retest the Asia low here. That is where the former pain point 75 was located. Gold, I don't know what gold is doing. I have no good levels around this area. I suppose if you look at the end of day options, you have 3. But yeah, to me that's not quite strong enough. If I'm looking at how they are positioned above it and below it. So I think 4,800 is a pain point. 4,875 is. But anyway, let's get back to the 50K account. So the biggest takeaway is to start very slow and to not try and get the first couple of days to be some massive days, and then to just chip away at it at like 1, 2, or 3 micros until you're at least over the trailing drawdown. Keeping in mind that the daily stop, if you're just starting out, really shouldn't be over $200 in order to maintain the account appropriately. Is this for everyone? No. If you are a confident trader who's taken multiple payouts, is able to keep accounts for very long periods of time, I mean, do it what you like, right? You know what you're doing, so I'm not going to be the one to tell you how to manage your risk and bankroll on a new 50K XFA. But you know, those kind of individuals, they can typically trade a little bit bigger because they are selective about the types of trades they are taking. So therefore, there's not going to be too much pressure since they've been there a million times, and they just know what they're doing with no emotional involvement. But for anyone who's not in that position, there is butterflies, there's fear, there's anxiety, there's frustration, there's the urge to trade the new account. You know, maybe it's your first ever XFA. And that's when you have to be wary of the motivation and productivity increase, that sensation of reaching a goal brings. And increased motivation and productivity, great for all other jobs, terrible for trading. Account killer for trading. The desire to trade something is not a mindset that you want to be trading from. You want to trade from calmness, not out of need or urge to place a trade because you have a new shiny XFA. That leads to you having a really bad first day, putting yourself into emotional dysregulation for the rest of the XFA, and then promptly losing it in like 2 days. Some people lose it within minutes. Like they work really hard, like 2 months of working really hard in an XFA, for an XFA. They get to the XFA and Globex opens and they go in. First trade doesn't go well. They go in again. Then they size up and all of the hard work over. What's that? It's because you can reset. It's because you can reset. If you couldn't reset, I bet you would think twice of running the account down 50% on the first day. So it's a good thing and a bad thing, right? You have to be mindful of what all of these amazing opportunities that prop firms bring us have in store for us, both on being able to start over and over and over. But where is the end goal? Do you want to keep starting over and over and over and over? Well, maybe. Some people do that with some prop firms, right? They run up a balance, get eligible for payout, drag it down. With Topstep, you have to have 30 profitable days over 150 that are not consecutive. And yeah, some people do that. They run it up, then they withdraw it. Get a new XFA. Run it up, withdraw it. Does Topstep want to see that? Absolutely not. Absolutely not. But people still do it. So yeah, relatively tight daily loss limit. So divide the maximum loss limit by 10. Make that into a daily loss limit. Fit all of your number of trades and sizing into that. Once you've proven that you can maintain your account past like a couple of weeks, you can untie the purse strings a little bit and then gradually increase. If you have a smashing first week, that could happen too. That's great. So you can slowly increase the daily loss as things are happening. And have a way to increase the daily loss limit. Maybe once you get over the maximum drawdown, maybe you can divide the new balance by like 20 or something if you run up a bigger balance, because as the time goes on and you build more account buffer, you want the daily loss limit to make you last at least 20 days, because if you have a bad month or something, you don't want to just have 10 days before you blow out. But for the beginning accounts, that's just about okay. For everything else, divide the account balance by 10, that becomes your daily loss limit, and just keep going. Same thing when you take a payout, because now you have a smaller account balance. Divide that new balance by 10, make that. So it has to be scalable, right? It can't be just like, oh yeah, I'm doing 200 forever. What can get you banned on Topstep? I'm new. Hedging on the same product between accounts. That would be probably an instant ban. So if you're a long silver in one account, short silver in another, and you're basically that's trying to game the system. This is not spread trading, and even when you do spreads, that's not what you do. If you do spreads between correlated products, they will be different products. Now, Topstep does allow that. You can be like, for example, long gold and short silver, because they're sufficiently different. Should you be doing that? Probably not. But they are sufficiently different for Topstep to not recognize that as a true attempt to game the system. Maybe you see something, maybe you track the spread between the gold and silver ratio, and then when it diverges, you aim to make some cash. The problem is doing that typically requires an inordinate amount of position sizing, which Topstep cannot provide you past the 15 lots. You will also won't be able to apply the right ratio between the two to account for the volatility differences, which is also a part of pairs trading, spread trading, co-integration trading, and all of that good stuff. So these platforms are not designed for that sort of trade. But if you try and do that, if you try and hedge the same product, long silver one account, short silver the other, they have systems to figure out that that's what you're doing, and yes, you will be banned. Apart from that, not much else can get you banned. Obviously, any attempts of full porting and stuff, that's not a cause for a ban, because if you think you can make that work, they've had people going into a live account doing that. So you get very good couple of weeks as you get into an XFA, and then you run up the balance to the point where they're like, okay, well, we have to consider this person now. And there have been people who full port and they still ended up in a live account. Scalping, completely allowed. I don't think they have any, because I'm not really a scalper. I hold my trades. Like my short trades, I would say that they're 15 minutes. My median average for a trade duration is about 100 minutes in the recent times. When we had like COVID and stuff, everything was moving even more than it does now, and my targets were getting reached in about 45 minutes on average, even the extended ones, like where I'm chasing 300 ticks. Now, metals do move a lot, but they are also extremely jumpy and choppy, so it's not smooth movement that is single direction. Back in COVID days, it was single direction, and I would argue even tariffs, because I've done some short natty and copper trades that went to like 300 ticks in the space of 5 minutes, all directional with very little pullback. So black swan events are a bit of an oddity in this realm. So yeah. Cody says, Deeyana, can you take me through your mental process after you severely messed up? The self-talk and the mental reset. Joshua says, what about limit sell, limit buy? That would be a hedge, wouldn't it? They don't want you to do that. If you're, so that would be like a form of straddle? Or is it the other one? I always confuse the strangles and straddles. So basically, it's aiming for that won't work, and the reason why is that the prices will whip both sides. The reason why it works on options is because you don't have the stop. Your stop is the premium that you paid for the long options on both sides. So even if one leg whips around but eventually ends up in profit, that is acceptable. On these accounts, you can easily, especially on silver, gold, something that moves 1,000 ticks a day, you can easily find yourself stopped out in both directions. And it is an attempt of trying to game the system, to capture the news, not to mention slippage. Oh my God. Slippage is like the bane of everybody's existence. And sometimes slippage goes your way, but most of the time it goes against you. So no, you cannot do long limit and short limit and then hope for the best. Because again, that's a gamble. You don't have a plan. You're just going into a news event where I'm taking a punt. They don't want to see that. And, for a very long time, Topstep had the rule of no trading 4 minutes before and 4 minutes after the high-risk releases. So the way I formulated my trading is to not trade until post 10Y cut, which is after 9 a.m. Central, at which point most of the releases are done for the day and the shackles are off, right? We can breathe. I don't have to worry about it. So I formulated all of my setups and playbooks that also mechanistically happen after that time. And that's because we have the mess of the first hour of trading, which is called initial balance. But yeah, so it's also not desirable to do longs and shorts. But let's go to the process of messing up. Now, my last really big mess up was many years ago. And it was during the FOMC release. I think it was 2014, I'm going to say. So it was like a year into my prop journey. I never really traded much intraday on high-risk releases. And I was trading mainly crude oil. I don't know what possessed me to try and trade ES on FOMC day. But hey, it happened. So anyways, I waited until the release was done because at the prop firm you also couldn't run an open position into it. But I thought it was all done. And then the press conference started. And it started to go my way. It went 140 ticks my way. And then I couldn't exit. So I was in a lot of size. I was in with, 100 lots, something like 140. It was a bigger position. Not like institutional thousands of lots, but it was big enough. And went my way. I tried to exit. Market orders not working. Limit orders also not working. Not getting a fill, right? Nothing. And then it started to reverse. So it reversed and reversed. And then CQG locked up. Because that can happen. And it by the time that it was all over and done with, I was sitting in about a $220,000 loss. Luckily, the account was a couple million at that point, but it was still horrible, right? It's like, oh my God, all that cash, like that could have been a Lambo, right? Well, not quite a Lambo, but maybe a McLaren. Just joking. No Lambos. We're not the Lambo bros. Yeah. So for me, that was a huge mess up, right? I felt terrible. I was like, wow, this is awful. And then having to walk into the office the next day, it's like a walk of shame in its own, in a completely different way, right? And so what did I do after? Well, I started going to the gym again. So I did discover that physical exercise, weightlifting in particular, tends to sort out some of the emotional problems, and that's primarily because our emotions while trading come from a very simple survival instinct that comes from our primal brain. It doesn't come from our rational prefrontal cortex. And once you've exhausted the fuel for the fight or flight response, which is your glycogen reserves from your muscles, you then find that the fight or flight just doesn't have enough fuel to kick off. So the emotional dysregulation, while it's still a little bit there, your prefrontal cortex is the one in control at that point. So I started doing that. So I had a rule, no trading until I've been to the gym. So if I had to get to the office really early, I would not trade for the first few hours until I can get to my lunchtime, and then I would go to the gym instead of having lunch. And I would typically eat at my desk. Nobody cared that you eat at your desk. It was a prop firm, so as long as the food wasn't like disgustingly smelly and stuff, everybody was eating. So like if you're in a trade and you want to, babysit it, people will be like stuffing food, coffees, all of that. It's a different vibe, let's put it that way. Because I know that some offices are really, really against people eating at the desk. All the prop firms that I worked at, no one cared. So, yeah. So that was the first one. Everything Everywhere. Bruno is not a bot. Bruno is our human moderator, not a bot. Even though the speed of his responses, they're awe-inspiring. So you may think he's a bot. He's not. He's a real guy. Currently in France, right? But you now live elsewhere. We're not gonna say where. So weightlifting, first step. Second of all, discover why it happened, right? You have to go and dig deeper as to like what, for me, for example, I was like, what the hell possessed me to trade FOMC and trade a product that I do trade but never afford the FOMC? I'm like, what was I trying to achieve? And I'll tell you what, because everybody was talking about it and everybody was like, oh yeah, it's going to be like, was it tapering at that point? Tapering of the QE? I don't know. But there was like a lot of talk about the quantitative easing program and what they're going to do about it. And I thought I had the read on it. I didn't. So that experience has taught me not to trade FOMC whilst he's doing the Q&A. So whoever the Fed chairman or woman is at that point, you do not want to get involved in madness. And some people were, when I talk about this in chat, they say, just use large time frame supply and demand. And I said, I got stuck. I couldn't exit. It has nothing to do with your levels. If you can't close out a position, because there's nobody on the other side to take it. None of your technical analysis is worth squat, right? So you have to accept that things like that can happen during high-risk resets on whatever platform you're using. But what my takeaway from it was weightlifting, don't trade the Q&A or the FOMC. You won't lose any opportunities by sitting it out. So next time there was time for FOMC, I got myself a glass of wine, maybe some popcorn or something, although I was probably on keto back then, so it would have been like a meat platter or something. And then just, some cheese and wine, why not? And then just watch the show. Don't touch, You can watch it, maybe draw some levels, just don't trade. So for me, that was the reason for the big loss, and I was sure never to repeat it. Now, if we go back to 2009, there was the first account that I ran up from 2,000 up to 90,000, and this was in pounds, not in dollars. And sorry, was it 90,000? I think at the peak it was 90,000, but at the time when I entered the position, let's say that I was floating between 70 and 90K. I entered a Euro Aussie position, and I was sure, famous last words, I was sure that it was going to carry on the uptrend. From what I could see, I got stuck in a position where they wicked the previous high and then massively reversed and went into a jump off a cliff. I was long. I didn't want to give it up. It was a swing trade, so I was being tortured by that for about a week or so. And after 2 years of me building up, let's say 70K, I managed to lose it in the whole week. Why? Because I kept moving the stop. Then I kept moving the stop. Then I added. Then that one lost. Then I re-entered. Everything you're not supposed to be doing. And then I re-entered again until Dee found out what a margin call is in the first 2 years of her career. So what did I do then? Well, I stopped trading and went back to the demo for 2 months. After I was back, I already started my journey of finding out why it happened. Why wasn't I letting go? And I found out some interesting things about myself. I found out that it all stems from my childhood, because it's never something that happened to you as an adult. It's always going to be some really insignificant thing that somebody did to you or told you when you were 3 or 4 or 5 years old, during those formative years. And once you discover why it happened, it's kind of funny, but at the same time it's not, because you've lost a lot of cash. So once you identify those deep-seated, let's call them mini traumas, because for me it was my dad telling me that I suck at singing. Because I have an older sister. She's frequently in chat, actually. It basically, she was singing, then, she was like 13, and she's very good at everything, just naturally. And I was 3, and whilst I was very talented for music, as it turned out, I was not as good at 3 years old. So I tried singing, and it's not very good. And my dad said, oh, my child, you will never make money as a musician. Which, for my young brain, really stuck with me. I'm one of those annoying people that remembers time from before they could walk. So I remember things vividly, even well before, like 4, 5, 6, 7, very vividly. And after he said that, something happened in my mind that brought out this competitive spirit. From that point on, I wanted to be better, best, do nothing halfway. And that carried me as an adult for a long time without me being aware that was the trigger. And my dad, he was an interesting man. He was a rock star in former Yugoslavia. And he gave us a great childhood, but he was a little odd. Like I loved him to death. He was my hero, but he had his moments where some stuff that he would say would be very, very hurtful. Like, he wasn't physically, he never really touched us, but emotionally, yeah, he knew how to hurt people, man. So that kind of happened to me, and as a young child, I was like, I need to prove myself. I need to be, I need to show him that I can be better. So what happened? I developed a career as a session musician eventually. Started gigging at 14 because I just had to start early, right? Because I'm D. And from that point on, I had to do everything to the best, almost like perfection. So once I start getting interested in something, I do not stop until I'm very advanced. And I'm like a dog with a bone. I will not let it go until I figure out why. So whenever something goes wrong in trading, I default to that person. And this is why I've come to realize that some of my trading now, after nearly 20 years, is a product of that. It's like, do I still have bad days? Yeah, I mean, I can royally mess it up, but not as royally as those two occasions. And whenever that happens, I will usually try to do exercise. These days, because of health issues, I can't do weightlifting, and I miss it endlessly. And I do think it's affecting the way I trade as well. But, you know, I can do dog walks. I can tidy up the house. I can, you know, do something physical to just move the body and get rid of the stress. And then if I want to keep sort of smashing combines or something, I recognize that. And then I go off and I play a video game where you can kill people with no consequences. Does that make me sound like a complete psychopath? Yes. But there are outlets. Now, the physical side is better. If you are able-bodied, you know, you should be doing some form of exercise. And I would say weightlifting. HIIT is not good because it raises cortisol, which works for young people. But unfortunately, when you go into your 35, 40, I'm 45 now, and it's just all wrong, right? So you try and do HIIT. Even when I was 37, 38, 39, doing bodybuilding, because I did bodybuilding, and again, in true D fashion, you can't just stop at a little bit of bodybuilding. I had to sign up for competitions, and I had to do 11 of them in the space of 12 months. That's me, right? But you can feel the rational brain coming back to you when you do weightlifting. But HIIT, for me, just raises cortisol even further. And that's not good for traders. I know that some biohackers like Brian Johnson, they swear by HIIT. But if I'm going to work out for 60 minutes to 90 minutes, I would rather do weights with breaks in between. Because you can give your cardiovascular system and your glycogen reserves a very good beating without raising cortisol negatively. So, you know, HIIT exercise for me as a female hasn't really yielded much good results either. I always used to get better results with weights and then slower sort of anaerobic heart rates. So somewhere between 115 to 125. Whereas HIIT forces your heart rate to go well over. That's not good for really old people and older individuals. So I'm not old, but I'm not exactly young either, right? And that's just fact of life. Nobody's getting younger, right? So exercise, journaling, identifying what went wrong, going into a demo phase, but using risk, daily loss limits, positioning with a plan. If you go into your day and you don't even know what your max default size across whatever you might be trading is, and if you don't know what your risk per trade is, you have no business trading any account that matters, whether it's XFA, whether it's your own account, whether it's whatever. To be honest, even combines, unless you're already at the consistency level where you know what you're doing. And when you mess it up, you know what went wrong. Like if I have a bad day, I'm not going to be like, oh my God, what happened? Yesterday, I definitely saw that silver had the potential to go long. Did it go long eventually? Yes. So that's the annoying part. That's when you get to a certain stage, you see what happened, and you're like, So what I was trying to do there was to run. Let's have a look at the silver chart actually for a second, and you'll see what I mean. So I was running, and obviously those combines are gone, so I can't even show you the execution. But this was it. So was this it? No, it was in here. So post NY cut, that is after 3 p.m. my time. So here it is after 3 p.m. That's this candle. I saw this wick, and I had a level that I think it was 92 that briefly got It didn't even touch it, but there was kind of a zone between 92 and 93 that I considered as a zone of interest. And then the post NY cut turned around with this wick. There was ADR low here as well. Actually, I can go back on my Blatek indicators yesterday. Yeah, so here we go. So the actual thing was, okay, I'm just going to show you this. And it's a bit messy because I'm working on this new indicator for something. But this one here, that was the ADR low. So 98.75. That's where it was. So 90. Hold on, was that it? Like, it couldn't have been. No, it was this one. God, they all look very similar, don't they? 90. What did I say? 98.75. Here we go. So, let me just orient myself here. Am I on the right chart here? I am, yeah. So I went into, does that sound right? I'm just trying to find, yeah, so it was after the group coaching, yeah, so it was the post, it wasn't the post on my cut, it was the day range fill time zone. So I'm like, okay, so we touched the ADR, we're bouncing from it, awesome, right? And then I decided to skimp on my stops and to use a 3 lot on micro silver instead of 1, which is my rule. Whenever I'm using, you know, I would prefer to use bigger stops and smaller size. But I was rushing. I was like, I can just smash this 50K combine. It'll be fine. It'll be fine. It was copy trading, the 3 of them as well. So I'm like, it'll be okay. And then this candle came. And before I knew it, I was out of the position. But was I right on the ADR bounce that then went for 1 million ticks in my direction? Yes. So what's the takeaway here? So I missed out on a 440 tick move that I could have run very safely on 1 silver with a wide stop of 140 ticks. But no, I decided to use a 55 tick stop, run a 3 lot position, and managed to be right on the hypothesis, but still lose 3 50K combines. So that is what I deal with. I don't go, oh my God, why didn't that work? Oh my God, I know why it didn't work, okay? I know perfectly well what I messed up there. But what am I doing today? I'm on micros on the XFA because that kind of a mindset of let's size up, let's do this faster. I know that transfers over to the funded accounts as well. So I don't want to be doing that today. I want to have low stress micros until my brain gets back to normality. So being okay trading 1. And why did I want to trade 3? Well, I wanted to rush. I wanted a chance to take some off. But silver doesn't allow you that because you just don't have enough room to do that because it moves ridiculous amounts. Like, what are these candles? What are the sizes of these candles? They're enormous. They're, these candles are 250 ticks wide. So however you spin it, like unless and I should have been watching this and I should have entered really closer to my orientation point. But no, I watched it bounce and I watched it bounce. And then luckily, like I said, it was combines, so it's not terrible. But is it the finest moment? No. And in the meantime, I was doing this perfect micro copper trade that completely went drama-free. Survived the tape bomb as well. And just carried on very nicely, very, very orderly. But what is the takeaway? The takeaway for me is that I know what I did wrong there. And I am taking steps today to really be okay trading with smaller size, looking for bigger swings, because today we do have gamma squeeze potential in nat gas, and we have the gamma negative volatility to the downside in copper. Now, Joe, I see you asked me a question to give me the rationale for the copper trade, so let's run through that. Let's start on the weekly chart, because that is where some of the eye-opening moments happen. This was the end of the previous week. Copper has this penchant of smashing through the all-time high, and then on the subsequent days, jumping off a cliff. This was an extreme example of that, but if you go back in time, a bit of Mariah Carey there, same thing happens. All-time high, smash, reversal. We don't have any more data here, but then here it goes again. All-time high, big reversal wick, then another all-time high 2 weeks later, smash. This is not an all-time high, but same thing. Goes into a new high, smash, and same thing. New high, smash, new high, smash, new high, smash, new high, smash. You get the idea, right? New high, smash. Should we make that into a hashtag on Twitter? Yeah, hashtag new high, smash. And then on the daily chart, I was analyzing it on Sunday, right? I was looking at things, I was chewing up data, trying to make sense of everything, and I saw that we reversed pretty hard. And then we have a drop base, and then yesterday we just couldn't get above 590. Just couldn't get above it. And I had 590 as an orientation point for days. Since last week it's been there. And we kept pivoting around it, pivoting. So I thought to myself, drop, base, drop, question mark. So when Asia opened today, I had the hypo that they're first gonna do the shenanigans that I mentioned even on group coaching yesterday, where they run it, there's a sweep, then they run it the wrong way, and then eventually they take it the right way. Now, Asia yesterday was slow. I don't know whether, I mean, it's worth it, right? Because I did get a better entry, because this happened whilst I was asleep. So I went to sleep somewhere around 3:30 a.m. That was here. It was a little bit of a drawdown there. But I was like, you know what? My stop is above this high. It's 3 micros. Who cares, right? And I just left it. Went to sleep. Woke up this morning. And I'm like, all right, let's check it. And I saw that it was down quite significantly. So drop, base, drop, question mark is now drop, base, drop, exclamation mark, because it happened. So that was the part of the hypothesis. The second hypothesis was this 580 level. And before I started Asia, I did all of my crunching of these things. So I've been working on that algo for a while, and it still looks very messy. So I'm still trying to work it out how this is going to look in the end. And it's going to be a trial and error process. But I had the idea that 580 was going to be the point because it was a gamma flip. We were glued to it, and that's known as gamma pinning, when the market is just pivoting around this one price point where the strikes are heading towards like 0 gamma. And then it just cannot confidently break above it, cannot break above it, cannot break above it. Put context behind it of the potential drop-based drop. And what do you get? You get, at some point, a decision that they cannot keep going above 580. It's not sustainable. Even if you look at the price action, it was all very inside bar. So this is one big consolidation. Let's do the ODA loop. Very, very flat on the 1 hour chart. So what does that mean? It means that at some point they will make a decision. And in this case, my hypothesis of a drop-based drop on a large time frame coupled with all-time high and smash, it was correct. So there you go. Hopefully that makes sense, Joe. And now I'm looking for the ADR low to be reached first and foremost. Average session range low has already been reached. So here is the copper chart. Again, a bit messy. Sorry, I'm working on this. But the average session range for the London session was 570. So even that is already unusual to have the full extension and the full range done by this time of the day. This is like not very normal for copper. Copper is normally pretty quiet until about LME beginning, so 11, 12, and then at 12 they make yet another decision. I'm talking GMT, so that would be 7 a.m. Eastern. And then the pre-COMEX shenanigans begin, at which point I try to close the position. Maybe if I'm in like 300 ticks or something, I might decide to hold it longer. But if we lose 70, looking at the options and considering the negative gamma, I have nothing before 550. Is it going to happen today? Maybe not, but there's a decent chance, let's put it that way. So that was my idea of what should happen today, and it is happening. So let's see if we end up in an outlier day. If the ADR low, which is sitting at 67.15, I believe, if that gets reached, then I'm going to be looking for maybe a bit of a bounce from it, but ultimately I will be looking for a bleed through it, because at the moment I have no other confluences apart from that 570 level, which is a little higher. But if we get to ADR low and then they keep going through it and they sustain a 30-minute TPO time frame from the market profile in there, this could be one of the more monstrous days on copper. Not sure about gold. Gold is pretty neutral. I know that it's moving, but there's a chop zone from 4,800 down to 4,750 ballpark. This is no man's land, and everything is just looking muted and neutral. So I wouldn't be. Gold is just not on my radar today. But copper, pretty clean. I think silver is a bit messy as well, because I was trying to see what they want to do with it. So I started on the weekly chart, as I always do. And I mean, can you glean anything from this? It's just all-time highs. Does it do the same all-time high and smash? Well, no, not really. Not since this happened, and even that wasn't a big smash. Since they broke out above 55.50 on this contract, there is no all-time high and smash. There's all-time high, then another all-time high, then another, and another, and another, and then a pullback breather, and then we go up and up. Weekly chart, not very useful. Going down to the daily chart, getting a little bit distributy, right? So we are seeing more inside bars. Can we make that industry term? Distributee. T-E-Y. D-Y. Still some buying wicks there, so not the most ideal situation. This was more a bull flag to me than a consolidation, because it had that skew downwards. True consolidations and distributions are a lot more even. They're like little soldiers that are like meh, meh, meh. But this one kept kind of bleeding lower and then lower and then lower, and that gives that skew that at some point, I mean, you can call it ascending triangle, you can call it whatever the hell you want to call it, but at the end of the day, it is a bull flag, and it typically tends to work reasonably well in bullish markets, not so well in some of the more range-bound markets. So again, context matters, but you can see that they are still trying to push it. Every time somebody sells it, we end up in a massive buying wick. This is all end-of-day developments. So that is something that I prefer to play in silver. That is what I attempted to play on combines yesterday, but alas, I mismanaged the stop loss, and now I have no combines, so I'm going to have to spend some more money today. So yeah, now what am I expecting on silver? At this level, nothing. Absolutely nothing. But if we get back down... So I'm not even sure I'm going to trade silver today because of that. It's just very sticky. I have 95 as a potential reversal point if we're going to reverse. But that would again have to be done in and around the euro close or convex close. And, you know, depending on how big that pullback is, I may just decide that that's a scalp. If we go lower, maybe 92 would be a decent orientation point. Why? Because that was sort of a pivot before they kind of ran it higher. So let's go down to a 30-minute time frame here and pop a 92 level on here. I'm just going to do coordinates because it's quicker. So if we analyze how 92 behaved, so this was the time when I got chopped up. So eventually it went higher. Excuse me, but it ran into 93, wicked a little bit above it, but ultimately came right back down through 92, never touching this 90 area, which was another area that I had in mind, but 91 was kind of a moderate support level, all based on the options activity, of course, and some supply and demand analysis as well. So if we look at the 15-minute chart, you will see that there was a decent quality demand there, but intraday I'm a little bit less, I'm a bit reluctant to use supply and demand on low time frames, because the intraday wicks where these demands are created are usually pops into larger areas of demand that have their own edge, the borderline somewhere much lower. So these inside lows in those larger swings, they tend to be taken, and they tend to cause these liquidity sweeps. So, you know, if you're that close to Asia low, supply and demand intraday, usually that's going to get taken. But it was a decent quality demand area, right? So that's one very nice run up. So if we get back down to 92, I would be interested to see if we can basically bounce again from it. But it has to be at the right time of day. It can't be just like random time. So 92 remains an orientation point. If we get back up there, down there, if the time of day is right, I might trade it. But if we just carry on upside, I literally don't have anything here. It's very precarious and sticky. So opportunity, yes, but little too messy for me. Little too messy. All right. Let's have a look at chat so I can catch up. Primal Range says, yeah, I've been starting off with 1 micro and have limits set for sizing up, usually 10 to 30 points apart. Excellent. Daniel says, you only make mistakes to learn from the experience. I agree. Mistakes are a huge part of the development process, and it is unfortunate that if someone is super honest about the mistakes that they're making in their trading journey, especially on X or Twix, Twitter and X, call it Twix, like Eddie, that's Eddie's joke, Twix, and you try to voice your thoughts just for your own peace of mind, you get so many trolls. You know, I have almost like 7,000 people following me on there, and whatever I post, there's going to be some sort of, how do you call them? Armchair. How do you call the people that kind of sit at home and give other people advice without actually having experience? This is where not sleeping is affecting me. Usually I know that word. But yeah, it's a, yeah, you're going to get so much hate. Like, I remember I posted one of my streaks where my entire month, it was like 20 days of green. And yeah, varying days. Some days were 300, some days were 1.5K, some days were 700, some days were 200. Most people are like, hey, oh my God, they're a great calendar. And then 3 trolls. What? You did 20 trades. It wasn't 20 trades. It was in and out, in and out. You did 20 trades and then you only made 200. That is mad to me. And I'm like, okay, nice. You woke up and chose verbal violence. It's good to see. And then some other people, it's like, oh, but why are your smaller days? Like, why don't you go for bigger days? Why do you have so many days of 200 and 300? Because it was a 50K account, and because that's just the rules of the game, and the day gave me more range-bound conditions, so maybe more trading, but not as much profit. Oh yeah, this is just a waste of time for me. And I'm like, okay. So since then, I'm like, you know what? I'm not going to post anything, because at this point in my life, at 45 years of age, I just don't need that toxicity. I don't need to wake up on Twitter and see a whole bunch of trolls having their opinion on how I'm performing. And I thought it would be a good inspirational thing for people. As it turned out, it caused me so much emotional distress. And I have pretty thick skin these days, pretty thick. But I don't know, things like that still irk me. It's like, I'm trying to be inspirational here. I'm trying to tell you how a properly managed account can look. But no, they found something wrong with it. So I'm like, you know what? I'm just going to remove myself. And this is where I'm going through a bit of social media fatigue, where I've been on social media for a long time. You know, I run my businesses through social media. I'm just sick and tired of the nonsense, man. And it seems to have gotten worse. Like, I don't know, before you always had a couple of trolls. Because before I used to do like live Twitter calls on the positions that I'm entering. Just because I had many people who wanted to know the thought process. So I would be, formulating a hypothesis. I was doing the live stream. And then I will post that on Twitter. And also post the outcome. So I remember one time I was posting my day range fill trade, which is usually some form of a fade. And again, some older troll came in and he was like, why would you short here? And then I actually got my 1R that I was looking for. I got my 35 ticks. And I went on his Twitter. He was boasting how he was entering an ES trade with 2 ticks drawdown. And that was the only trade. The rest of your trades, do they also have 2 ticks drawdown? Is that the game you're playing? And he didn't answer me. So then we had a huge argument on Twitter, mostly him just throwing sticks at me. And again, that was a few years ago when I was healthy and maybe a bit better equipped emotionally to deal with that. But these days I'm just like, you know what? You want to criticize my calendar? I'm not going to give you that satisfaction. Like, I'm done. And I've had a bad track record with posting brokerage accounts, so I don't have... I have what I call a YOLO account. It's not the biggest account, but it is a six-figure account. However, I have another corporate account, which is much, much bigger than that. And it's not under my name. It's under one of our company's names. So that would be pointless. But every so often back in those days, like let's say 7 years ago, I used to post brokerage statements. And I'm like, this is what I've done. This is all the trades, all the information. Some scammer took that, cloned everything on it, started claiming that was some signal service, and then defrauded people. And I found out about it by one girl asking me, hey, I didn't receive this month's payment. And I'm like, for what? And she's like, oh, the prime market stalkers. And I was like, what the F is prime market stalkers? And she goes, oh no, please tell me this is you. So she sends me a link and I click on it. And there's my name with my little Bob the Chameleon, prime market stalkers, and a whole bunch of other signal services. Obviously a complete scam. And I've got to say they did a great job at it. Like, if these people applied themselves in other areas, they would probably run very legitimate businesses. But no, they choose to scam people. So since then, I'm just like, you know what? This is pretty dangerous because this guy took her for like $5,000, and not being funny, but $5,000 is a lot of money for a lot of people. So I felt really bad. And since then, I'm like, well, this is obviously getting to a point where I'm developing some sort of, presence or whatever, and people feel that it's worth it to take whatever I post and then try and claim it for various scamming purposes. So I stopped. And so it's like the more people are mean, the less info they're going to get out of me. Let's just put it that way. I just can't be bothered anymore. I really cannot be bothered. I still get people telling me that there's like clones of Twitters and Instagram accounts. One of them was bold to create an Instagram clone account, block my business account, and then go and follow my husband's account. So my husband goes, do you really want to follow me like on your business account? And I'm like, I don't follow you on the business account. What are you talking about? And he showed it to me. And I'm like, oh, wow, that's not me. So I couldn't remove it. I asked multiple people who are following me and found that account to report it. Instagram did nothing. They said it's legit. And they're still out there trying to scam people. So there's that. I don't think that social media is doing enough to verify whether people are for real. And you got to be careful out there. Like, seriously, it's a very, very ugly world at the moment. Cody says, I'm in the US and stayed up to join. Welcome, Cody. Welcome. Yes, I've seen your questions earlier. First time in your session. What is the ratio of fundamental versus technicals? I'm mainly technical. I would say that as an intraday trader, I have very little interest in macro. Why? Because macro really takes days and weeks and sometimes even months to come true. And unless you're going to swing trade, even the trades that I do on my biggest stops, they're still tiny, right? Me asking for, 300 ticks in a single day. Is that going to affect the macro picture if we are in a mean reversion trade today? If we are in a negative gamma on copper, if I'm seeing a drop-based drop, is one release saying, well, we think that the Fed is going to be doing this with the interest rates, and we think that that's going to be negative for inflation. Do you think that copper is immediately going to turn around and run to another all-time high? Probably not. Will it happen over time? Yes. So for me, I would say that if you look at my entire analysis, at this point, it's probably 80% technicals and maybe 20% macro. Like if there's some big news of Fed changing rates or something, I may use that in the coming days, but I will not use it on the day. So my whole spiel, if you will, is looking at how some options are positioned for the dealers who are market making actively intraday. And that's what I tried to figure out. I also have the volume profile, market profile, really that's my favorite, TPOs, statistical extremes, supply and demand analysis on large time frames, just seeing where we came from previously to where we are right now, and to try and figure out where the dealers are positioned and where they're most likely to hedge. This is something that I've used since the beginning of my trading, but before now, we never had access to data where it would be simple just to kind of crunch all the data and put a line on the chart. Now, the first ones who did that were some of the other companies on equities. But then Mentor Q came in with their commodities, because the reason why I stick with Mentor Q for the basic analysis is because they do all of this crunching behind the scenes for nearly all of the markets. They do copper, they do, they do natural gas, they do platinum, they do, I think, cattle and forex and a whole bunch of other things. And you no longer have to look at the matrix. And I used to spend like 2-3 hours per day trying to figure out which areas will be magnetic and which are a little bit weaker, so maybe there'll be an accelerator, or in a range-bound day, they could be a stopping point too. But these days we have AI, we have bar chart that does have delayed data, but it doesn't really matter. I'm not looking for a real-time price. I'm looking for, and it's only like a 15-minute delay. It's not like it's hours. So if you want just like free data, you can easily drag it from bar charts and then drag it into an AI of some sort. Now I go one step further because I'm a coder, so I like to code some of my own indicators just to make my workflow a little bit better and faster. And I do have an API that pings bar chart, so it is a paid for service, and it just drags out options, strikes with open interest, but then also Greeks, so that you can get implied volatility and whole other things per strike. So it's like a deeper view. And then I crunch that, and those become sort of my anchors on the day. I then try to match them with some of my other existing things like statistical extremes, ATR low, ATR high, and then I track what's going on via the TPO profile and or volume profile. Here we only have volume profile. I will be honest, I do prefer the TPO profile, but if we have a look at what copper is doing at the moment, so let's just make this into one chart. We are still inside value, so we're seeing that range for the London session, even though we smashed pretty far down. And now it's going to be decision point at midday, so in about an hour's time, to see what they want to do. So is it going to be a normal day where we bounce off of the ATR low? Is 570 going to be it? Because it is a moderate call wall here. It could be, the stopping point, in which case I'm going to have to manage this and maybe close it out and just, call it a day, basically. I will be on fast markets today. I do have to go to the doctors before then, so I will only be on for like half an hour. But I will pop into fast markets to see whether there's another opportunity. Maybe we can find another trade. I don't know what I'm going to do at that point. But yeah, so for me, macro is like such a tiny piece of the puzzle. Where the dealers are hedging, that is key for intraday. Once you know that, things become a little bit clearer, and you suddenly stop looking at every price point. It's like, is it going to be the value low? Is it going to be value high? Or is it going to be Asia low? Right? So you want to have anchors. So for me, the anchors are 580. To the upside, still that 590 keeps cropping up. And then the mega call wall, which should be a stopping point, if we do go into an uptrend, 6 evens. But to the downside, we have this big gap where there's absolutely, if I was on my stream, I would swear, but let's just say not much. I would say F all. Not much between 570 and 550, right? That's the next anchor. So this is why I say if we lose 570, that's going to not give us a bounce from ADR low, but it's actually going to make the dealers hedge even harder. And they, at that point, have to hedge with the move in order to remain delta neutral, which is their only task. They just want to stay market neutral. So they will buy or sell options against the retail and then actively hedge to both generate transactions, make some money for themselves, and then to remain the market neutrality that they all strive for. That doesn't mean that they can't be caught red-handed when markets start flying around. Even they get like, whoa, what? And then they have to scramble, which leads to chaotic movement, but that is all a function of negative gamma. So once we understand all that, you stop being afraid. So even if you have a bad day, you're not like filled with butterflies on the day. You know that you can repeat stuff that you've repeated in the past just by centering yourself, sizing down when things are flying around to the best of your ability, and then just staying objective. So what is the profile doing? What is the tape doing? Are we sustaining the rally? Is the rally losing steam? Do we see some absorption? What is the resolution of a potential sweep that we've seen? Is the sweep with the direction or against it? Those are all the questions that I ask myself. So, you are seeing like 20 years of doing this. So I no longer freak out when I'm in a position. I know that some people find it very difficult to stay in on the same position for hours. But if I identify an opportunity that has legs to go further like this one, I will do my best to not manage the position, just kind of let it go and leave it to do whatever it wants to do. until I start seeing the breaks of the structure. So if we crawl back above the value, and if we cannot break this 570 wall, that will be the cause for me to go, so this is not the big trade that I was expecting. So maybe it will happen tomorrow, maybe it won't happen at all. That's absolutely fine. So this is where objectivity over bias has to step in. Rather than me high on hope here, I'm going, we're going to get 550 today. Honestly, I will take anything between sort of 575 and 570 at that point. It's a pretty wide range, but I will take it. I will be like, okay, didn't quite do what I wanted to do, but hey, at least I got a little bit of money out of it, right? So that's kind of how I look at things. But macro, honestly, on very few isolated days when something fundamentally is changing, like for example this Venezuela thing about the crude oil, that could be a game changer. It's just the deeper I looked into it, the more I was like, ew, that's going to be like years before that's additional supply into the U.S. crude oil production. So that's a no. And I think that's why we saw the rally, because it turned out it's a bit of a can of worms situation. Yeah, Chilling once again says trolling is out of control these days. For real, D, when we see you on TikTok. Oh God, I do have a TikTok account, but look, like I said, social media fatigue. I'm too old for TikTok. I really tried to make some videos that would be appropriate for TikTok. And then, look, I struggle to make my YouTube channel active like once a month. Multiple social media with multiple different contents. I don't know. I don't really see myself. And TikTok and the whole short form, it's annoying to me, okay? Every time I find myself doom scrolling reels, I stop myself because it's a bad thing. It's not a good thing for you. We're supposed to be traders with long focus and long attention spans. And what do reels and shorts do and all that? They chew up your focus, first and foremost, and second of all, they destroy your dopamine because you just want more and more and more. So you keep scrolling and you keep scrolling and you keep scrolling and you keep scrolling. Then next thing you know, it's 5 a.m. in the morning and you've just watched like 500 random TikToks until you end up on like the most random things ever that are now throwing you down the algorithm and thinking that this is what you will be interested in. I don't want my life to be that. Like if I'm resting or having downtime, I would prefer to play a video game or something. Go walk my dogs. Maybe train my dogs. They definitely need some retraining, a couple of them. Most of them are good puppies, but we have a couple that are a bit rowdy. Still at 4. If I do doom scroll anything, it will be via my tiny account where I post my dogs' photos, because we have 8 dogs. And every so often, I will post things on there. So with that account, when I start doom scrolling, it's all animals, cute doggos and cats, and doing silly things. That's relaxing to me, and that's not trying to digest information in a tiny bit-like pieces. It is fun. It's just seeing funny dogs do funny things. So I'm okay with that. But anything else, and me trying to play the game of young people, I'm not a beauty influencer, so it's not like I can sit there and go, let me show you what my makeup is always the same or very, very similar. I have very little variation. I can do it in like 5 minutes flat. So it's not like I can sit on TikTok and go, hey, let me show you how I do my face today. Or if, some people do dances, even the older people, they're doing dances. I'm not going to do TikTok dances. And listen, I used to be a gymnast as a kid. I can dance. I just don't want to do silly dances, and it saps my energy. I have very limited energy on a day-to-day basis. I want to use it for things that matter and not making silly TikToks. And then providing bite-sized information, that's not my jam either, because I don't think you can explain day trading in bite-sized pieces. You can drag out like small things that are out of context. Is that useful to anyone? No, it's just spamming. I don't want to spam anyone. If I make a short, it's usually a spoof. It's like it's a funny sort of comic relief moment where I'm making fun of either prop firms or I'm making fun of myself. There was one where I was like, let's be super serious, but let's also not be serious. So I was like, all right, you need to write in your journal. And I'm doing a voiceover, and then I start by having the journal upside down. It's like, you want to do, it's not even the right way up. Oh my God. And, so things like that. I have an idea for some shorts that I want to do with Hopper McTilt, who's like your unreliable mentor. So I'm going to show it to you. I think I've shown it before. So here's the dude. It's a grasshopper. Of course it is. Because I call the people who are losing control, going on tilt, I call them grasshoppers. Where is the... here we go. This is the hand. So this is Hopper McTilt. So he's probably going to be featured in some of my shorts. I'm still trying to figure out whether it should be my voice that I kind of modify and try and do an impression of something, or whether it should be like a modified AI generated thing. Oh no, somebody's throwing up. Oh great. You right, Bunny? Sorry, one of my dogs threw up. So yeah. He just has great timing for it. You alright, boy? Oh, what happened there? What have you been eating? Oh boy. So yeah, if I do shorts, they're gonna be like mocking things in the industry, and this guy saying, "I'm Hopper McTilt, hopping from one bad trade to the next. I'll see you later." Or buy high, sell higher or lower. Either way, we're learning. It's like really unreliable mentor who's like gets overexcited and he does things wrong all the time, but it's okay. He's there. He's in. So that's my take. So no TikToks. No TikToks. Whatever is on there already under Market Stalkers, that's probably what it's going to be. And that will be it. Yeah, so Trade Nickel says, I know it's not a frog, but the Kermit voice comes to mind with the grasshopper. Remember Fozzie Bear? I need to work on my impressions. I used to be pretty decent at impressions. Not so much these days. Alright, so it does look like I think this is, the jump in P&L is because of the nat gas. Yep, there it is. So they're starting to move that. That's interesting. Alright, so let's see how far. It's still not into a higher high. If it breaks into a higher high with increasing volume, which I don't know whether we... Oh yeah, they've appeared. So yeah, natural gas is waking up just in time. I know it's the end of the stream, but yeah, we'll see what happens. So let's wait until the higher high. Higher high needs to sustain. So it's not like enough that they just bust to like 5-6. And then kind of come back. They need to sustain a 30-minute time frame above it with no meaningful selling wicks. What is meaningful? It means the selling wick cannot be bigger than the third of the entire length of the candle. That is actually something that I use in my algorithms as a filter whenever I'm looking for moves and stuff and for entry conditions. But yeah, that's looking promising. This 550 and the fact that this is now an old contract, because we will be rolling probably today. I need to look at the CME. But this has a potential to do another run up. Is it going to happen in this contract? I don't know. We'll find out together. And I'm going to finish it here because, again, I have a couple of things to do today before fast markets. But you will see me, I think it's 9 a.m. Central that I'm jumping in for half an hour. And then we're going to see whether I'm just done for the day or whether we can maybe find another cheeky trade somewhere. All in all, that's all I have for you today. So, yeah, I will probably see you next week at this point because I don't think I've got anything tomorrow on the daytime show. But yeah, until fast markets, I will see you very soon. This was the Euro Trade on Topstep TV. I'm Marcus Talker D. It all rhymes, and I will see you in a little while. Take care.